All right, everybody, coming at you with the June market update. I hope everyone had a great Canada Day long weekend and that the summer is starting out well for everyone. So let's jump right into it. So coming from our board, we're just going to go through their press release, which they give us every month, and kind of break down all the data that they've sent out. So a headline coming out from our board is rising supply levels weigh on home prices. Sales in June continued declining compared to the previous month and the same period last year, with 835 sales recorded this month. They remain below long-term average and are consistent with the lower figures observed in recent years. This slowdown in sales is evident across all property types and in every area within the region. So our area basically spans Halton and the greater Hamilton area, which is quite a large area. That basically goes from the waterfront all the way up to the 401 and across the Golden Horseshoe. So quite a large area. Higher interest rates and rising cost of living have impacted the housing market despite a recent rate reduction by the Bank of Canada. Mortgage rates remain high and potential buyers are likely waiting for further cuts or a shift in market conditions. Rising supply levels have reduced the sense of urgency experienced during the periods of low inventory, taking the pressure off home prices. So a couple things in that paragraph to break down. Higher interest rates and cost of living impacting the housing market. So people's disposable income is definitely going down. Most people that I'm chatting with are making decisions about, how they're spending their money, cutting back on meals out, cutting back on entertainment, cutting back on vacations. So it's really eaten into the desire to want to, take on any more debt or any large mortgage. I think people are really becoming much more conservative and risk averse with their spending attitudes. No one's going to make a move for one extra bedroom if it means their mortgage payment is going to go up by thousands and thousands of dollars per month. Now, the other interesting point from this paragraph is buyers waiting for further cuts or a shift in market conditions. So really right now is an ideal time for sideline buyers. As soon as any inventory gets gobbled up, we know that prices tend to go up. And it's interesting that we are seeing more listings come up on the market, kind of take that steam away from that rate cut. I personally think we are going to see rates drop much faster than predicted. Even though Tiff Macklin has been giving us his withering stare worthy of Severus Snape himself, this is the same guy who said, rates are going to remain low for a long time. And this is the same guy who's saying we're going to be cautious with rate cuts. I am not sure that's actually true. I think the messaging and the action may be slightly different to manage the current rate environment. So new listings in June reached 2,048 units, a gain over last year and high enough relative to sales to contribute to further inventory gains. June's inventory levels trended up month over month. So month over month, we're trending up and we're 54% higher than last year's levels. So that is a massive jump from the amount of listings available last year. And if you remember June last year, we had a pretty healthy spring market. We had a couple more rate cuts at the end. And this is really when the wind began to come out of the sails of that rapidly increasing market. So, the sense of urgency is definitely not there with buyers. They're being much more cautious. Gains in inventory relative to sales caused the months of supply to rise to nearly 4 months. Now, there's actually 3.7 months of inventory with both freehold and condo combined, 3.5 for freehold and 4.5 for condo. So there's quite a lot more inventory than we're used to seeing in the condo market. Higher supply levels relative to sales took some pressure off home prices. In June, the unadjusted benchmark price was $849.9, which seems like a listing price. We could just say $850. A year-over-year decline of just over 2%. Despite the decline, year-to-date average benchmark price has remained relatively flat compared to the last year, and we're seeing that as well. So the market's teetering either way. What is going on with home prices? People, due to a rather loose and unsound monetary policy, people have been forced to use their homes as a saving account, and we are kind of seeing the result of that now. So what's going to happen? I personally think that rates are going to drop faster than is being telegraphed both in the media and by the Bank of Canada itself. And they're probably, if that is the plan, they're probably doing that to make sure people aren't taking on much more debt. We all know that there's a looming renewal bubble coming down. We're not going to see the true effects of that until about 2026 when the bulk of them starting to flip. So, typically August is the best month to buy as buyers. If I was a first-time home buyer, I would be looking at homes that have been on the market since before the Canada Day long weekend that maybe got listed in May that have been sitting for a while. Those are the homes to target. So you can probably get, try to get a very, very good deal. It doesn't mean that you can egregiously lowball and steal these houses, but it does mean that you can get some built-in equity right away, because over the long term, real estate prices should rise. If you're a seller, that doesn't mean that all hope is lost. Now, 3.5 months of inventory for residential freehold, is really, a balanced market. So, trending towards a seller's market, 1 to 3 months of inventory, that is a seller's market. So we're really in just a balanced market right now. It feels really, really intense for sellers because we're not used to having homes sit. So, we're telling all our sellers, hey, expect to be on the market for quite a few weeks. But anybody who's coming to see your house right now is a legit buyer. Like, nobody is wandering around looking at houses for no reason right now. As we've heard, back in that second paragraph, that, buyers are kind of waiting to see. Anyone who's not serious is waiting. Anyone who's out looking at houses is likely a legit buyer. And the strategy that we're using right now that seems to be working quite well for our sellers is, no games. We're pricing their house right at market value, getting 3 to 10 showings before a successful offer, and retaining as much of that equity as possible. And people are really pleased with that. They're able to preserve the quality of their asset, preserve their net worth, and take that capital and divert it somewhere else. Another trend that we're seeing with downsizers, rather than just selling the big family home and purchasing a bungalow, they're actually choosing to rent, because rent is quite cheap right now, relative to what you get and relative to what it's been in the past. There are many, 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 townhomes and condos that are sitting on the market for rent because, in 2021, when everybody was refinancing their houses to become real estate investors, buying pre-construction inventory, all of that inventory has come on the market at the exact same time, flooding the market with availability. Now, you don't have to be a PhD economist to figure that out. It's just, hey, if everybody buys something at the exact same time, comes on market at the exact same time in the future, likely there will be more inventory than people are used to. So, bottom line is still real estate is a great hedge against inflation. Our monetary policy is still encouraging people to keep real estate as a wealth building tool. So if you're a buyer, I'd be out there right now looking at those houses. Get your ducks in a row. I think we're going to see much more inventory after Labor Day long weekend too. We have quite a few listings in the pipeline. And for sellers, you can still do very, very well. Make sure you're presented right, priced right. Definitely do not overlist and give yourself room. That is a way to kill your showing activity. But also don't go the opposite direction where it's like, hey, we're going to list super low and try to get into bidding war. That's very unlikely to happen unless it's egregiously underpriced as well. So, market value does appear to be the way to go to get results. So as always, call us, give us a ring about your unique real estate position. Let us know if you need anything at all, and we will see you on the next one, and have a great July. Bye for now.